So are the banks still a good buy for dividend investors? Now, historically, banks have always been a favourite with dividend investors because of their high yields. But of course, that's all changed this year with the pandemic, with many of the banks either deferring, sometimes even cutting, or even just reducing the dividend payments. That means as dividend investors, we aren't getting those sweet dividend checks like we used to. So if they aren't paying or they're paying reduced dividends, are they still a good buy for dividend investors? And since this video is going to be my opinion only, please take it as such. And because it involves financial information, make sure you do your own research and your own due diligence before making any financial decisions. Okay, so the banks make up about 17% of my portfolio. I own 3 of the 4 big banks and 3 of the smaller banks here in Australia. So of course that means my income has been impacted. Now there are 2 schools of thought on what to do right now. Should you hold and wait it out, or should you ditch the banks for now and look for better, higher yielding dividend paying stocks in the meantime until the banks start to recover again? Now, either is a perfectly valid strategy. I've got no problem with what people choose to do. I, however, will be waiting it out because whatever you decide to do is going to depend on how patient you are. So we clearly have to mention the cut in dividends this year for bank shares. Earlier this year, APRA, they directed the banks to defer or cut the dividend. They've since rolled that back and now are saying that banks should cap dividend payments to 50% of earnings. Now that's about half of what we're used to. Most bank dividends usually pay out historically between 80 and up to 95% of earnings. Now, of course, these APRA recommendations are just recommendations and there's a lot of wiggle room in the interpretation. And banks can still do whatever they want. They don't have to follow the APRA recommendations, although they will, because it's clear right now that banks are making less profit. Businesses and consumers, to a degree, they're not borrowing loans like they used to. Most companies, and rightly so, are trying to hold on to the money and preserve the cash to ride out the coronavirus. They're not taking on new loans, of course. Factor that in with extremely low interest rates right now and the fact that some people will be defaulting on their loans. The banks aren't in a strong position right now. As to what they're actually doing, NAB reduced its interim dividend to 30 cents, which is around 64% lower. And Goldman Sachs predicts that the end of year dividend, which is paid in December, will be around the same, around 30 cents. So ANZ had a vastly reduced dividend of 25 cents, which is due next month. And their December dividend, Goldman Sachs is predicting it to be about 60 cents per share. Westpac actually scrapped their interim dividend. It's actually the first major bank to cancel a shareholder payment rather than deferring it. But they are expected to pay a final dividend. And Goldman Sachs predicts this to be about 45 cents per share. And CBA has announced it's paying 98 cents per share in September, which is actually higher than the Goldman Sachs recommendation of 90 cents per share. So they're paying next month. The smaller banks are going to follow the larger banks. That is that the first half of the year, they'll either have reduced or deferred their dividend, and the second half of the year, they will probably be paying, except it will still be reduced. So of those, you can see that the first half of the year, banks have either deferred or in the case of Westpac, cut the dividend, but they will be paying in the second half of the year, albeit a reduced dividend, around half or possibly lower. So it's good to know that dividends are going to be paid going forward, even if they're going to be cut in half. And you've got to remember that some of those earlier payments were not cut, except for Westpac, they were deferred. So there's still a good chance at some point in the future that these are going to be paid out. And that's kind of why I have no intention of selling. I want to see what the banks do with these deferred payments. Because really, we don't actually know exactly what the banks have in mind for these deferred payments. We don't know if they are going to be paid sometime in the future or they're going to be cut entirely. And if they are paid out, when is that likely to be? Are they going to be paid in one lump sum? Are they going to be paid out in installments over a few different dividend payments throughout the years? We know they're not going to be paid this year, but are they going to be paid maybe in 2021? Or is that a bit too premature? That's going to depend entirely on the economy and how long this pandemic goes on, because businesses and banks are going to hold on to cash as long as they can. Don't you wish you had a crystal ball, though, to know when all of this is going to end? I'm sure that even the bank boards don't have any idea if they're going to be paying out or when. They're going to wait and see what the economy going forward is going to be like and what recommendations other APRA and other places will make. But Australian businesses are starting to open back up, albeit in a reduced capacity, and it's still going to take a while, but it is good news. But let's go back to whether the banks are a good buy or not. While the market has recovered somewhat from the fall, there still is a bit of a way to go. And so shares, including bank shares, are still quite cheap at the moment. And you know I like a good stock market sale. Now, banks are considered fairly safe and reliable stocks, especially compared to other companies. And they certainly have been safe and reliable in the form of dividends historically, although they have been somewhat stagnant on stock price. They aren't growth stocks. Banks don't make great growth stocks anyway. People buy them for the dividend. If you're a growth investor, you're going after stocks like Afterpay and Zip, not the banks. But because the banks have made excellent income stocks in the past, they're a favorite with dividend investors. So whether they're a good buy or not is going to depend entirely on how patient you are. I'm going to assume, since you're watching my videos, that you're a long-term investor. You're not in this for the short term. And it's probably going to take a good 5 years for the banks and most other companies to get back to really good growth levels. But during that time, they are going to be increasing. Barring any other major world catastrophe, 2021 is going to be way better than 2020. 2022 is going to be better than 2021, and so on. We hope. If you rely on this income in the short term, it might be better to look elsewhere. I'd be looking at blue chip stocks like Wesfarmers or Woolworths just for the meantime. But if you are a long-term investor and you're willing to ride this out and you're patient like I am, then yes, they're still a good buy. The prices are down and you can grab them at a reduced price. And if you already hold, you've got to make the decision whether you need the income now or you're willing to wait it out. So have a think about how much you actually need the income right now. If you can live without the income, it might even be a good idea right now, if you plan on keeping the banks, to switch over from taking the income to using the dividend reinvestment plan. That way you can start to build up and have more shares of the company when they do start paying dividends again. Then you can switch back to having the income again. So to summarize, are they a good buy? If you're a short-term investor, no. If you're a long-term investor, it depends on how much you're relying on this income right now. If you have the patience, then definitely hold or buy right now while the prices are down and wait it out. If you need the income, I would be looking at other high yield dividend stocks right now and wait for the banks to start paying again and then jump back in. So those are my thoughts on whether the banks are a good investment or a good buy right now, especially for dividend investors. I hope you've enjoyed this video. You can agree or disagree, and I'd love to hear your thoughts in the comments. Take care, stay safe, and I'll see you in the next video. Bye.